nation.
We must make it possible for those who have talent to go to college.
The hope of the future.
A mind is a terrible thing to waste.
Every year they arrive on campus by the millions, carrying dreams of success.
I want to go to college. I want to do something that I love.
And the promise their hard work will pay off.
A good education is no longer just a pathway to opportunity, it is a prerequisite.
But by the time they leave, most are carrying something else.
Basically, like having a mortgage is going to cost us $650.
Staggering student loans.
It's about $72,000, 40, 50.
$500,000 is right there.
Debt that doesn't die, even when the student does.
What they told us was, well, you co-signed, too bad.
The intentions were good.
No qualified student who wants to go to college would be barred from doing so by the lack of money.
But those intentions have gone bad.
This looks indeed like the housing bubble.
Surging debt.
I'd wake up every morning wishing I didn't have this.
Skyrocketing costs.
Tuition has increased about 29%.
Some who are in it for the money.
You were an admissions counselor, but you really were a salesperson.
Absolutely, yeah.
Leaving everyone else on the hook for the price of admission. The cost of a college education is rising faster than the cost of medical care, and as much as 3 times as fast as consumer prices in general. And that's just the beginning of the price of admission. I'm Scott Cohn. This is the story of a debt crisis few are talking about. Americans now owe more on their student loans than they do on their credit cards, a debt fast approaching $1 trillion with no end in sight. We borrow because we see little choice. A college education is, after all, a key to success. That, it seems, is an article of faith.
So, Lord, thank you for bringing us here together today and bless us.
I think as a parent, you always want better for your children.
Thank you for the guidance in our lives today.
We've committed to our children's education from day one. I mean, that's the commitment we made when they were born.
The Kuipers family lives in Tinley Park, Illinois, outside Chicago. For Rick and Tammy, the world revolves around their kids.
Be with us through the remainder of this week, and amen.
My boss is food for Jesus. Amen.
I'm excited for them to see what, we've invested in their future through high school, and now what's next?
That's what we raised them for, to be good adults, sending them out into the world, making a difference.
Zach, the youngest, is 15, a high school sophomore. Shelby, 18, is a senior, interested in science.
We've encouraged them to go to college, at least try a semester, a full year.
But the Kuipers' nest is already half empty. Chris is a college freshman studying engineering at Calvin College, a private school in Grand Rapids, Michigan. Kaylee is a junior at Calvin, where she recently switched her major to international development after a trip to Africa left her with the travel bug.
We visited a bunch of different tribes and villages and just learned about what they were doing for development.
It hasn't been easy for the Kuipers to save for college, especially after putting their kids through parochial school. Rick drives a garbage truck at work every day before dawn. Tammy commutes an hour each way to a law office in downtown Chicago, where she's a paralegal.
You're going to have kids in college
For years. Well, it's free in college twice.
So, like the majority of American families, the Kuipers will borrow money to pay for college. A lot of money.
Do you have an idea of how much debt your kids will have coming out of college?
We're figuring, I think, right about 80.
Yeah.
Right about 80,000.
Yeah.
We're coming out.
$80,000 in debt.
Yeah.
But for Shelby, who's been applying for college, that $80,000 figure somehow never came up.
Have you heard that number before?
No.
What do you think about that?
It's a lot of money. Yeah.
2/3 of American college students will graduate with debt, on average $24,000 for the class of 2009. Add loans for graduate school and parent loans on behalf of their kids, and the Kuipers family plan of $80,000 per student is all too typical, says Lauren Asher, who directs the nonprofit Project on Student Debt.
The need to borrow has grown for all types of students at all types of schools, And the amount that students are borrowing is driven by the share of costs that students and families are expected to cover after aid. Now, those costs have risen faster than family incomes, faster than available grant aid.
America's student debt at the end of 2010 is nearly $880 billion, a number growing by more than $2,800 per second. But most students, like Kaylee Kuipers, don't dwell on that.
Tell me about the loans and, how much you have so far in loans and how you plan to pay them back.
That's a good question. I don't really know how much I have. My mom handles a lot of it for me.
Does that scare you at all? I mean, you have tens of thousands of dollars in loans, and you don't know how to pay them back.
It should. It doesn't.
Why not?
I just feel like I'm in the career field that I love, so it'll somehow work out.
Yeah.
But for a growing number of graduates, it's not working out, especially in an economy where well-paying jobs for college graduates are in short supply. Student loan defaults have doubled in the last 5 years, according to the Department of Education, now approaching nearly 250,000 defaults a year. And because the government is lending most of the money, every default leaves the taxpayers on the hook. Iowa Senator Tom Harkin chairs the Education Committee.
The schools keep the money, the students keep the debt, and the taxpayers lose.
Is this another housing crisis waiting to happen?
Well, I tell you, there's a lot of similarities between what's happening with student loans and the housing crisis.
But Alan College, an activist and author who drew on his own student loan default to found the group StudentLoanJustice.org, says the student loan crisis is potentially far worse than the mortgage crisis.
A defaulted home mortgage borrower, and don't get me wrong, it's a horrible outcome. They walk around, they walk away from their house, wearing a barrel, and not much else. In the case of student loans, there is no walking away.
Unlike most other forms of debt, student loans carry almost no consumer protections, little ability to refinance, and by law, they generally can't be wiped out in bankruptcy.
If you borrowed money from a student loan program and didn't pay it back, there may be a price on your head tonight.
It was a reaction to the last student loan crisis in the 1980s, but College says it created a system he calls predatory.
These powers would make a mobster envious.
Default on a student loan today, and you could lose everything.
I know I have to pay them. I know and I will. I never said I wouldn't,
Kyle McCarthy, 28 years old, lives in San Francisco. He has a master's degree, $72,000 in debt, and he says no way to pay it back.
I can't get out, and I'm about to lose my apartment, and my phone's about to be turned off in a couple days, and I've got negative money in my account.
He had hoped to turn his passion for soccer into a career in physical education, but 4 months after graduation, in a pickup soccer game, he blew out his knee, requiring major surgery. Unable to work for months, his medical bills piling up, his loans went into default. Now the collection agents call day and night.
I've tried to work out anything for them, I can pay this amount of money, I can pay $50 a month, and it was you need to pay the full amount now, or we're just going to take it out of your paycheck.
Student debt can even outlive the student.
November 3rd, 2009, my wife and I lost our only child, our son Vincent, in an automobile accident.
Vincent Grande was weeks away from taking his exam to become a stockbroker when he was killed.
Does any parent ever bring a child into this world thinking that they would outlive them? God, no.
Ralph and Joan Grande soon learned that not only had they lost their only son, they were on the hook for more than $81,000 in student loans Vincent had borrowed through New Jersey's state student loan program.
What they told us was, well, you co-signed too bad, and the longer it takes you to make a payment, the more the interest is going to accrue and the higher the payments are going to become.
Ralph is a car salesman. Joan is a school teacher. Their personal tragedy compounded by the prospect of financial ruin.
Where am I going to go from here? Where do we possibly come up with that kind of money?
A question being asked by millions. Coming up,
Feels like there is no way out.
why the worst of the crisis doesn't show up in the official numbers and why some would like to keep it that way.
Schools are accountable for their default rates.
And college as a business.
I didn't sign up for this loan. I don't want this loan. They said, yes, you did.
Are for-profit universities pushing the system over the edge?
No one here has not gone to school because of financial aid. Don't you be the first.
Or are they just more honest about it? And later, with the price of admission soaring, why did we find these college administrators sipping wine in Napa Valley? Price of admission, America's college debt crisis, continues in a moment. It's hard to argue with the goal.
So tonight I ask every American to commit to at least 1 year or more of higher education or career training.
A more educated nation is a more competitive nation.
By 2020, America will once again have the highest proportion of college graduates in the world. That is a goal we can meet.
But how to pay for it?
Please apply for our financial aid. We want to give you money. There's lots of money out there for you.
That's Secretary of Education Arne Duncan, insisting to high school students in Alexandria, Virginia, that yes, they can afford college, despite the rising cost of tuition.
Low and moderate income families overestimate the price of college.
The Obama administration has overhauled the financial aid system. In the past, the government paid private companies to make student loans. Now, the government makes the loans directly, freeing up some $4 billion a year for increased grants. But the vast majority of federal aid remains student loans, $135 billion in 2011 alone.
We're creating a class of borrowers here and debtors. Isn't that a concern?
Maybe a minor concern. We have to educate our way to a better economy. The only way we're going to get there from here is through many more students, not just graduating from high school, but going to college.
If it is only a minor concern, critics say that's because the true cost of the explosion in student debt is hidden. The official student loan default rate reported by the government is 7%. But that doesn't include people like Nick and Emily Houtman of Round Lake Heights, Illinois.
We thought it would be worth the investment. We believed that when we graduated, we would get jobs that would be worthy of this debt.
At the time of this interview, both were unemployed, with 3 young children and student loans totaling more than $250,000.
It's basically like having a mortgage. I mean, $250,000 that we owe, which, over 30 years is going to end up costing us probably $650.
What does that feel like?
Feels like there is no way out. Like it'll just be there forever.
It's like we're not going on vacation. We're not fixing the house. We're not. Sophie, I didn't even get to put her in CCD this year. It's so silly. It's a communion year. She's gonna miss it.
Nick and Emily married young, then started a family, but they were determined to continue their education.
And I just said, can we afford this? Can we afford for me to stay in school? And he
What'd you
said,
say? So we really can't afford not to.
Eventually, Nick got his MBA and Emily got her bachelor's degree, just in time for the recession. Without jobs, the two were able to get their student loans deferred. That kept them out of default, but the interest kept building up.
They're subsidized and unsubsidized.
Now they're looking at a payment of $1,760 a month for the next 25 years.
$500,000 is right there, and we'll have paid $275,000 in interest.
The Houtmans don't know how they'll pay the money back, but with no default, their plight doesn't show up in the government's numbers, and neither do millions of borrowers who have defaulted. That's because the government only measures a small snapshot of defaults, loans that go bad in the first 2 years. But borrowers who are in trouble can apply for deferment or forbearance, putting off their payments for 3 years. There are plans to increase the government snapshot to 3 years, but Iowa Senator Tom Harkin says we are still missing the big picture.
We don't really know what the default rate is because they have so many students that are now in, quote, forbearance.
Look at defaults over the life of the loan, and Alan Collins of StudentLoanJustice.org says the default rate would be higher, much higher.
My best guess currently is that 1 in 3 students are ultimately going to wind up in default on their student loans.
But for the schools, that doesn't matter, because their eligibility for federal financial aid is based only on that limited government snapshot.
Let's get started.
Which helps explain what the higher education community calls default management.
I'm going to set the table.
At this Department of Education conference in 2009, listen as a department official tells college administrators about the importance of keeping their default rates down.
For many of you, the survival of your schools will be at stake.
No wonder default management has become a growing industry, with entire companies devoted to it.
My name is John Beal, President of Ride International Student Services. Thank you for your interest in our default management program.
It is in the students' interest to prevent defaults as well. But Lauren Asher of the Project on Student Debt says many schools and their consultants are misusing default management, not using it to help the student, but instead to make their official default rates look good.
If you push a student to take a forbearance, which is the easiest way to put off making your federal loan payments, then they're not in default. They don't show up in those numbers, but they are seeing their debt rack up tremendously. And when they do enter repayment, they're going to be facing much, much harder circumstances in paying that loan back.
And the biggest offenders, she says, schools that unapologetically are in it for the money.
No one here has not gone to school because of financial aid.
Okay.
Don't you be the first.
Up next, for-profit colleges. What happens when student loans are part of the business model?
You were an admissions counselor, but you really were a salesperson.
Absolutely, yeah.
And later, the lessons they don't teach on campus.
The degree is not a guarantee anymore.
When Price of Admission returns.
The nation's leading educator of working adults like you. Welcome to University of Phoenix.
With billions of dollars in government student loan money for the taking, it's no wonder college in America has literally become an industry. The University of Phoenix, with 470,000 students, is the largest so-called for-profit university in the country. In fact, it's the largest university in the country, period. In 2009, University of Phoenix generated nearly $3.8 billion in revenue for its parent company, the Apollo Group. 86% of that money came from government financial aid. With a business model that relies on student loan money, some say the University of Phoenix and other schools like it are going after that money a little too aggressively.
I received in the mail just a thing saying, "Congratulations, your loan was approved." I didn't sign up for a loan.
Karen Johnson, a single mother in Salem, Oregon, bought the University of Phoenix's pitch, a flexible schedule that would allow her to earn a business degree, keep her job, and care for her 2-year-old son.
Everything that was portrayed to me, this was going to be great. I'd have more time to spend with him. Maybe wouldn't have to work as long as hours, those types of things.
Tell me what your understanding was about how you were going to pay for it.
My understanding was that I was going to apply for the financial aid, and then anything that financial aid didn't pay for, I was planning on paying for out of pocket.
You had no intention of taking out a loan?
Absolutely not.
But she says soon after she started classes, she got the letter about her new student loan.
I said, "I don't want this loan. I didn't sign up for this loan. I don't want this loan." They said, "Yes, you did."
Johnson says she tried to drop out and get her money back, but was told it was too late. She says the loans, $1,600 for approximately 2 weeks of classes, have gone to collections and damaged her credit.
Unfortunately, I wish this was an isolated example.
Oregon Attorney General John Kroger is leading a proposed class action suit, alleging Apollo Group misled its investors by not disclosing that it was misleading students, like Karen Johnson.
They want to keep that person in a degree program and keep going deeper and deeper into debt.
Make them sound like drug pushers.
I wouldn't go that far, but I have to say no truly caring institution of higher education or technical training would view their potential students that way.
The University of Phoenix and its parent company, Apollo Group, declined our request for an interview. In an email, a spokesman said while he could not discuss any individual student, no financial aid is processed without a signed acknowledgement, and insisted we go to great lengths to ensure that every student understands the rigor of our coursework and the expense of our degree programs. The University of Phoenix is not the only institution under fire.
No one here has not gone to school because of financial aid.
Okay.
Don't you be the first.
The Government Accountability Office sent agents posing as students to 15 for-profit colleges.
You have some students who are making maybe $600, $700, $800, maybe $1,000 a day.
In each case, the agency says, admissions counselors made false statements, sometimes wildly overstating the value of their school's programs, just to get students to take out loans.
If you compare it to the other schools, the cost here is really low.
The for-profit schools are really inflating this bubble.
Iowa Senator Tom Harkin says if the student loan crisis is like the mortgage bubble, for-profit colleges are subprime.
It's a bad business model in this way. A for-profit school makes more profit by getting the lowest income student to go there. The reason for that is because the lowest income student gets the most loans.
10% of American college students attend for-profit institutions, but they receive 25% of government aid and account for nearly half of all student loan defaults.
And then just sign your date right there for me.
The GAO says it found high-pressure sales tactics, pushing students into overpriced programs they can't afford.
I was hoping I could talk to the financial people
They won't even let you back there.
Ostensibly, you were an admissions counselor, but you really were a salesperson.
Absolutely, yeah.
Josh Prine worked for Westwood College, which operates 17 campuses in 6 states. Westwood started in the 1950s as the Radio and Television Repair Institute of Denver. Today, it boasts 15,000 students and programs ranging from automotive technology to computer game design.
Let's do a little role play, okay?
Prine demonstrated how he says the admissions process worked.
I'm a student, you're an admissions counselor, and I got to get out of this, this job that I'm at. Tell me what your program is about.
Sure, I'd be happy to tell you what the program is about, but tell me more about why you're even looking to go to school.
He says he was trained to find a student's pain points, the buttons he could push to make a sale.
How long have you been working there?
A couple of years.
A couple of years. Wow, so you've been feeling like that for a couple of years.
Yeah.
He would always steer the conversation away from cost and back to the pain points.
College, I know, is pretty expensive. So what's this going to cost me?
College is expensive for sure, but there's no student has ever not gone to Westwood because of financial aid. So we'll figure that out at some point.
He says after making the sale, he was supposed to call the student every day through the 14th day of class, the last day under federal rules that students can cancel their loans without penalty.
At that point, my job's done. I don't ever have to call the student again.
Prine says he began feeling guilty, so he quit Westwood after 6 months. A Florida law firm that says it's received hundreds of complaints from Westwood students got wind of Josh's story and helped him prepare his testimony at a Senate hearing.
Thank you for inviting me today and for conducting hearings on this issue.
Westwood calls Prine's Senate testimony materially incorrect and has asked the committee to strike it from the record. The company acknowledges it monitors its students' progress during the first 14 days, but says that's to determine if the student is likely to succeed, not to lock in their financial aid. Under federal rules, Westwood has to return a portion of the aid anyway if a student drops out before completing 60% of the term, and the school can't access any of the funds at all for the first 30 days. A Westwood spokesman alleged to us that Prine is being paid by the law firm.
Are they paying you?
No, they haven't paid me at all.
Have they made any promises to you?
No.
After the hearing and the GAO report, the company issued a statement saying it was appalled by the unauthorized actions of a few Westwood employees and announced it was changing its compensation system. It's not the first time Westwood has gotten into trouble. In 2009, without admitting guilt, the company paid $7 million to the federal government to settle charges the company submitted false claims for federal student aid. Brian Moran of the Association of Private Sector Colleges and Universities acknowledges the industry has an image problem.
They're looking for the Saturday afternoon football game or the fraternity party, and that's not what our schools do. Our schools perform the function of educating.
He says for-profit universities have a 70% placement rate, but the industry counts a placement as any position that requires direct use of the skills taught in the program. Moran says defaults are so high because the schools serve so many low-income students, a public service. And the high-pressure recruiting incidents are aberrations.
We condemn that practice. I mean, we don't need to misrepresent what we do. We do it and do it well.
Some schools are making changes anyway. The University of Phoenix now requires a 3-week orientation so students know exactly what they're getting into. Kaplan Higher Education is now offering a free trial period at its 70 campuses. But the changes are costly. Both companies have to lay off staff.
How much of this is being done just because they got caught? That's what some of our schools, or the majority of our schools, do so well, is that we are flexible. I congratulate those schools for doing that.
But with more than $24 billion in taxpayer money each year going to for-profit schools, the government is taking no chances. The administration has proposed new rules tying the school's eligibility for student loans to the job placement of their graduates, as determined by the government. The industry says the rules would lead to even more cuts.
We believe the current proposal by the Department of Education will eliminate choice for literally hundreds of thousands of students.
Education Secretary Arne Duncan admits that to meet the president's goal of leading the world in college graduates, some will have to graduate from for-profit schools.
Great for-profits, good for-profits are absolutely part of the solution. They're helping young people, they're helping single moms, they're helping folks who have struggled to get back on their feet through education and climb the economic ladder.
Besides, for-profit colleges aren't the only ones with a business model. Coming up,
big sports complexes and fitness rooms.
Why is college so expensive?
They're big money.
And is this any way to fix it? Price of admission, America's college debt crisis, continues in a moment. Rick Kuipers works 12 hours a day, starting at 3:30 in the morning, to put his 4 kids through school. 2 of them attend Calvin College in Grand Rapids, Michigan, a private liberal arts college that also has a brand new $50 million field house with a rock climbing wall. The cost of tuition and room and board at Calvin is around $33,000 a year. Rick sometimes wonders where all the money goes.
They're constantly trying to make the campuses more attractive to students. They big sports complexes and fitness rooms and things of that nature. And these aren't small things; they're big money.
2/3 of Calvin's graduates in 2009 had student debt, averaging $28,500, well above the national average. Calvin officials declined to be interviewed, but the school is hardly unique. Nationwide, the cost of college is rising 2 to 3 times the rate of inflation.
We have a broad crisis in terms of the amount of money that students are borrowing to go to school.
Iowa Senator Tom Harkin, who's been crusading against for-profit colleges, now plans to expand his investigation.
As the chairman of the Education Committee, I'm going to be taking a look also at public universities also, and what's happening there in terms of where that money's going, and how come their costs are going up all the time. It's almost like a vicious circle. The more we put into Pell Grants, the more we put into student loans, the more the tuition goes up.
The biggest driver, experts agree, is shrinking state budgets, forcing schools to lean harder on their students. But that's not the only thing pushing the price of admission higher. This is the Meritage Resort and Spa, nestled on an 8-acre private vineyard in Napa Valley, California.
How do you drink wine only on special occasions? How do you drink wine daily?
And those are college administrators and financial aid officers from across the country, learning the finer points of California wine.
Take the wine up and take a look at it. And just kind of look for fancy color, and you should notice color differences between the two grades.
They are attending a conference sponsored by Hire One, a Connecticut company that lets colleges outsource parts of their financial aid programs, which the company says controls expenses. Tell me what a wine tasting in Napa Valley has to do with value, service, and keeping costs down.
We hosted our clients in California near our office there for an event to learn more about Hire One services. We had training sessions about specific services, and we also talked about or listened to our clients, and they're talking about what services they want.
Miles Lassiter and Mark Volchek founded Hire One in 2000 when they were students at Yale. Today, it's a public company. Its stock soaring. $75 million in revenue in 2009, on pace to more than double that in 2010, with some 700 colleges on board. What do you think that students, parents, taxpayers would think about seeing their school's financial aid officers, administrators, bursars, sipping wine at a resort in Napa Valley?
I think university administrators are spending their time learning about a valuable service offering, and we spent the time at the conference focused on that and talking with each other. There were some social events, as you mentioned.
And networking with other administrators is really important for them to learn about how other campuses use products and are more efficient.
In addition to the wine tasting, college officials could tour the lush Meritage vineyards, and the conference included dinner at an award-winning Napa restaurant, rented out for the evening. When people see them in that setting, how can they be assured that these people have the students' interest at heart?
This is a paid conference that people are attending for educational purposes. It is not for entertainment.
But the business side of Hire One has come under criticism of its own. The company makes most of its money by taking the portion of a student's loan proceeds beyond tuition, funds that are supposed to go toward books and living costs, and distributing it to students in the form of a debit MasterCard, letting them spend that refund, their student loan money, any place that takes the card. The University of North Dakota signed up with Hire One in 2009. Student Alexandra McLaughlin got her debit card right around her birthday.
I got it a day after I turned 24, so I kind of went out and spent some on shoes and clothes and went to the bar. And but most of it I tried to save for some bills, and then I did buy a new car. So the interest rate was a little bit lower than it would be through a car dealership.
Talk about the wisdom of giving an 18-year-old student with limited experience handling their money, putting it on a debit card that basically they can use for anything. They can use it for books, they can use it for rent, they can use it for pizza and beer.
The financial aid system is designed to provide living expense money as well. So it's everyday money that you use, yes, to buy food, to buy drink, if that's appropriate.
Hire One makes money from MasterCard transaction fees paid by merchants and debit card fees paid by students. $20 to replace a lost card, $19 a month for an inactive account, and a 50-cent fee per transaction if the student keys in a PIN instead of swiping the card. Shane Gerbert is a senior.
Now, remind you, this is a 50-cent transaction fee that's levied against your excess financial aid. If I wanted to get some money off of an ATM somewhere that's not the 3 Hire One ATMs that are located on campus, that'd be a $2.50 fee. I don't like the fact that someone's taking money from money I borrowed.
Hire One says its fees are competitive and all avoidable if the student uses the card properly. The company says students can opt out of the card and claims the card reduces the cost of administering financial aid because it streamlines the process. University of North Dakota Vice President Peggy Lucky agrees.
It's
pretty unique to find an arrangement where we as the university can obtain a service and we don't have fees assessed to the institution, which then we turn around and pass on to our students. We really looked at it as a pretty reasonable win-win kind of arrangement.
Clearly a win for the University of North Dakota official who attended that Hire One conference in Napa Valley on the university's dime. The cost, which a university spokesman called not out of line, about $1,700 for 5 days, roughly equivalent to half a semester's room and board in a university dorm. Tuition at the University of North Dakota, while below the national average, has increased nearly 30% in the past 5 years. Coming up,
You're completely overwhelmed.
Student Loans 101, Stafford, Perkins, Sallie Mae. What does it all mean? And what are you paying for?
Should some students just not go to college?
What's a college education worth if you can't get a job? In the conclusion of Price of Admission, America's College Debt Crisis. With some 19 million students in college, most of them in debt, there's big money in student loans. And no one knows that better than a giant company with a dainty name, Sallie Mae, which until recently was the largest originator of federally guaranteed student loans. For years, Sallie Mae made a fortune on student loans. In fact, the company did so well, its CEO, Albert Lord, was able to afford this, his very own private golf course. 244 rolling acres in the Maryland suburbs of Washington, which Lord, who declined to be interviewed, spent a reported $30 million to develop. Sallie Mae says he sold the course in 2008. In 2009 alone, Sallie Mae collected $1.7 billion in interest on student loans, and nearly $300 million more servicing loans and bundling them into securities to sell, just like mortgages. But in 2010, everything changed. In a provision tacked onto the new health care law, the federal government took over the function of making loans to students, saving billions in subsidies it was paying to companies like Sallie Mae.
By cutting out the middleman, we'll save American taxpayers $68 billion in the coming years. $68 billion. That's real money.
But for Sallie Mae, that meant real changes. The company is laying off 2,500 employees. CEO Albert Lord gets to keep his job, but he is taking a 20% pay cut to $1 million a year plus stock. The company is also changing its business model. Now it makes money collecting and servicing loans for the government, consulting with schools, and making private loans to students and parents. And it's that last part that has some concern.
Private student loans are a risky financial product.
Lauren Asher of the nonprofit Project on Student Debt worries the growth of private student loans could inflate the student loan bubble even more, pushing students and their families even deeper into debt.
They have variable rates, and the lender generally reserves the right to increase your rate for just about any reason. It's hard to predict costs, and that's what makes them particularly dangerous.
Like government student loans, private loans can't be wiped out in bankruptcy, but the terms of the loans vary widely. Some of Sallie Mae's private loans, for example, are less expensive than federal government loans. But Sallie Mae isn't the only company offering student loans. Among the new private lenders, for-profit colleges. To keep their customers from dropping out, many schools have set up their own lending arms, which typically charge double-digit interest rates. Most everyone agrees, including the lenders, that private student loans should be a last resort.
If students and families are getting any pressure to take out a private student loan, they should know they have other options.
There are Perkins loans for low-income students, Stafford loans, some that build up interest when you're in school, and subsidized ones that don't, and so-called PLUS loans to parents. The government now offers so-called income-based repayment, allowing many students to reduce their monthly bill. But no one, certainly not the Secretary of Education, is willing to suggest that borrowing for college at all in a dismal job market could be a risky proposition.
Should some students just not go to college?
I think they need to go to the right college. Again, this is all about choice.
But some who have been there are less certain.
The hardest part is that a degree is not a guarantee anymore. And I think you have to have experience as well.
Nick and Emily Hauptman did find jobs, which means they'll soon have to start making payments on their $250,000 in student loans. Nick, with his MBA, got a job as an accountant for a local family business. Emily, with her bachelor's degree, found work as a legal assistant. One of her co-workers in the same job doesn't even have an associate's degree.
You know, you don't have to go to college
Work
right
for
out
a
of
year.
high school. Find out what you want to do. Don't discover yourself in college and pay all this money.
Ralph and Joan Grande, who found themselves on the hook for $81,000 in loans when their son was killed, were able to reach a settlement with the state of New Jersey. Now they owe a little more than half, or $41,000.
You take out student loans and co-sign them for your children. Make sure that you take out life insurance. I'm telling you, you don't think it'll ever happen. And God knows, I never thought it would happen to me. But it does happen.
Kyle McCarthy is trying to stay afloat with the help of friends. The wage garnishment has begun. $171 a paycheck, or about a quarter of his take-home pay.
By no means am I saying don't go to college, because that's not what I'm saying at all. But, I mean, people have to be aware of what they're getting themselves into.
Shelby Kuipers, a high school senior, was accepted at one college. Cost of attendance just under $30,000 a year. She's weighing her options, but isn't terribly concerned about the money.
I still want to go to college. I want to do something that I love.
Her parents aren't concerned either, even though their college finance plan depends on Rick, Tammy, and all their kids staying employed and staying healthy.
Is there a plan B, or what is there? You just hope and pray?
Hope and pray, yeah.
The day after this interview, Tammy Kuipers was rushed to the hospital with chest pains. Turns out it was just a scare, but Tammy admits a dose of reality. Away at college, daughter Kaylee, majoring in international development, still isn't worried.
So I don't really know how it's going to work out, but I'm getting a great education here. I'm at a private school and I like it.
She likes it so much that now Kaylee Kuipers is thinking of going on to graduate school, though she's not quite sure yet how she'll